It's 3 o'clock. So good afternoon, everyone. Very good to see all of you here. Welcome to CFA Society's Malaysia ESG game show. And on your Zoom screen, you will see a few of us who have enabled our videos so that you know that there's no robot behind whoever it is that's participating here. So that you can see Evelyn and our colleagues from CFA Institute, we have Richard, David, and Alicia. You will also see a few of the other of our instructors, learning instructors from CFA Society Malaysia participating in today's game show. We have Bobby, Jason, Nicholas, and Jin Yong here as well. Yeah. So a warm welcome. I'm Caroline Ng, the Executive Director of CFA Society Malaysia. I'm very happy to have the representative and participants from 6 of our employer partners. Each of you here have been handpicked and identified by your organization to join us in this very exciting game show. So for just some introduction to those who have, this is the first time that you are coming across to CFA Society Malaysia. We are the professional members society representing the investment profession in Malaysia. And we are actually a local society network of CFA Institute, which is the global professional membership body for the investment professions. So locally, we have around 900 over CFA Charter holders, and a few of them are here together with you today. And we continuously have about close to 2,000 candidates who take the CFA exams every year. And the aim is, of course, at the end of their journey, they would also join part of the society of the very esteemed charter holders in the country. Now, today's session on the game show, as you can see the title, it will be focusing on ESG. Environmental, social, and governance. And I'm quite sure all of you have heard throughout the past 2 years, especially the focus on ESG, be it you are from the banking or whether you are from the investment field, right? But having said that, not that many fully understand what the ESG is all about. And what is each of these factors represent, or what is it all in detail. So today's session, we have partnered with CFA Institute, our colleagues, to bring you a more innovative way to give you an understanding, a basic understanding or foundational understanding about what ESG all about, as opposed to hearing lots and lots of webinars, which is one way. So today's game show is going to be participative. So the next 1.5 hours, I hope you're well seated, comfortable, and try not to blink your eyes too much, because each blink you may be missing some of the more important information. So sit tight, and I will pass on to my colleague, Richard from CFA Institute, who's dialing in from Hong Kong. And he will be taking us through today's game show. And he's going to start off with setting the context right in terms of how the game show is going to function. Yeah. So Richard.
Thanks so much, Caroline, and hello to everyone. Caroline, apologies for making a hash of moving your slides there. Hopefully I'll do better with the game show itself. We're delighted to be here with you all today. CFA Institute is a not-for-profit organization, and our mission is to raise professional and ethical standards so that finance serves the greater good of society. And of course, there's very little better way to do that than by thinking about responsible investing, sustainability, and the critical pillars of ESG. So we built this game show some time ago with BNP Paribas Asset Management as a partner. They have a sustainability center, and we are very happy to bring this experience to you all here today. Now, as Caroline has said, it's very much a participatory experience. So this is how it's going to work. Okay, so it's a quiz basically. And the quiz is broken down into 4 separate rounds. Each round has 5 questions. All of you are going to be put into breakout rooms, and in your breakout room, I think there's actually a slide for that. So let me just go to that. So what's going to happen is that you'll start off in the plenary, which is where we are now. We'll show you a practice question soon so you can get an idea of what those look like. And then you'll be put into your breakout rooms where your group is going to be asked to answer 5 questions in 6 minutes. Okay, so you have roughly a minute per question. In fact, treat it like a minute per question because you'll need a bit of time to get in and out. You can ask the person who's your room facilitator to go back and forth in the questions if you like. So if you see another question, you think, I think our answer to the previous question was wrong, can we go back and check? You can ask your room facilitator to take you back to a previous question. The room facilitators won't help you with the answers, but they will try and be helpful. So, you know, if you're getting stuck on a question and spending a lot of time in it, they might suggest that you move forward to cover all of them. Now, the critical role that I need someone in each of your groups, and your room facilitators will check this, to be is a team scorer, okay? And you will need a pen and a piece of paper, and it's a very simple job. We're going to ask you to write down the team's answer to the question, okay? And if we go back here, I can just show you, very briefly. So the critical issue is that recorder. And if I go on here, here's an example of a practice question. Okay, so this isn't part of the game itself, but I'm going to ask you to try and answer it. So if you were in your room, you would get a question like that, and there would be a number of possible answers. Okay, so just individually, decide what you think is the correct answer to the question. Which one of the following is likely the oldest methodology in sustainable investing through funds? So I'll give you 20 seconds to work out what that answer is, just for yourself individually. I won't ask you to call it out. Okay, so in the group environment, you'd be discussing this answer, suggesting answers, hearing from your colleagues about what their thoughts are, and then the team decides on an answer. Now, the correct answer to the practice question is B, exclusionary screening. And if this was one of the live rounds, the recorder would write down practice question B. And I would say in giving you the correct answers to the questions, the correct answer is B. For that, you earn 1 point, and your recorder would record a single point for that in your group. Now, exclusionary screening is the oldest methodology in sustainable investing effectively. It has quite an interesting history. It goes back, the first sort of recorded incident of exclusionary screening goes back to 1758, where the Quakers in America, at one of their collective meetings, decided that no Quaker could profit from trade in slaves and guns. Okay, so that is an example of exclusionary screening, and a commonly applied example of exclusionary screening today, in fact. So it's quite common for investors not to invest in companies that manufacture or link to the manufacture of weapons. Exclusionary screening, of course, also has a very long history in Islamic finance. And the specific dates at which that was introduced is difficult for us to determine historically, because Islamic finance was essentially codified in the 60s. So it is very much the oldest, and it is also the most commonly practiced. It'll interest you to know. So part of the reason why exclusionary screening is so commonly practiced is because it's so easy to do. And so, for example, if you decided you weren't going to invest in companies that manufactured tobacco products, that again would be quite an easy decision to, an easy screen to put up and quite an easy screen to execute. Of course, with the very unfortunate war in the Ukraine at the moment, you're seeing a lot of exclusionary practices around that war, people divesting in companies that have Russian origins or have links to Russian power. So that is how that game show works. Okay, you're going to get a question, you're going to make a decision in your group, your recorder is going to record the answer, and you're going to move on to the next question, and we're going to keep going in rounds. At the end of 5 questions, you'll come back to the plenary, and I will give you the answers to the questions with some additional information, and your recorder, of course, has to score and count your points. So please make sure when you get into that group, which is where we're going next, that you have identified a recorder. Now, I myself will be in one of the groups. So as we come out of the group back into the plenary, there'll be a few seconds where I just have to get the slides in the right place so we can discuss the correct answers. So thanks so much to everyone for joining. What we're going to do is we're going to go into round one of the ESG game show. Welcome to all players. And Evelyn is going to send us into the breakout room for the first question.
This meeting is being recorded.
I think some may still be talking in the breakout room when they're pulled back to the main hall. Everyone is so competitive.
Yeah, we didn't have.
Don't worry, you have a few more rounds to go.
Sorry, Caroline.
Yes?
I just want to ask, are there any prizes or whatsoever, or is this just a game?
You'll see at the end.
Okay, all right. Thanks.
Okay, Richard, pass back to you. Is Richard there?
I was just doing my favorite trick of speaking on mute, forgive me. Okay, so the challenge was to select 3 of the above 4 that are principles that PRI signatories will adopt. And the correct answer to that is A, B, and D, okay? So there are actually 6 principles that PRI investors, or that signatories to the PRI investment agreement take. The question C, the sort of the red herring here, aim to limit global warming to 2 degrees Celsius, is in fact one of the objectives of the Paris Accord, okay, and of course more commonly discussed now as a goal to limit warming to 1.5 degrees. So for 1 point, you get 1 point if you selected A, B, and D. And now the second part, there was an additional point for the total number of PRI signatories. And of course, this is slightly tricky because there's several PRI numbers, okay? Now, according to my records, the kind of PRI signatories who are in the investment space at that time were 3,874, okay? So what I'm going to do is, if you picked anything within 500 of that number, okay? So in other words, if you were kind of low 3,000s to mid 4,000s, you can give your team a point, okay? Because it's a really tricky question. What is important here is that there is very, very significant support for the PRI. And if you look at the commitments that people, that signatories to the PRI make, which is incorporate ESG issues, active owners, and in order to be an active owner, you need to have a very clear understanding using ESG data of what that company's actions are and what the metrics around those actions are. And then D, obviously, for that all to happen, you would need to seek appropriate disclosure. So I think that kind of the takeaway from this is, the PRI signatories now represent $130 trillion of assets, okay? And that is, that is obviously a mix of both private and public assets, but it's very close to the total market capitalization of all stock markets. Okay, so I think that one of the clear messages that you get here is that the need for ESG related data and the engagement by investors with firms on sustainability related issues is really, really going to ramp up. So I think that's a big takeaway from question 1. Congratulations to teams who earned any points there. Okay, question 2, let's move on. Question 2, the United Nations Global Compact. And just so that I've done it before, I've given people the wrong answer, so I just want to double check. Okay, now the correct answer for this is in fact B, C, E, and F. Okay, B, C, E, and F. And the kind of the tricky parts of this, okay, there's quite rightly so much conversation about carbon because that is such a critical component of environment. So in fact, that carbon red herring fits into the F, the sort of wider area of environment. And then the other wild card there, or the red herring there, was data protection, which doesn't actually form part of the United Nations Global Compact, but of course is a critical component of the S pillar. And so, data protection is very important to the materiality of firms and therefore of great interest to ESG investors. So for a single point on that one, correct answer, B, C, E, and F. Excellent, moving on. All right, question 3. Now, this was a question about the Sustainable Development Goals, of which there are 17. And what is quite interesting about the SDGs is that the 17th SDG is about the collaboration between organizations to achieve the Sustainable Development Goals. So this session's very kindly organized by CFA Society Malaysia today is an example of that kind of collaboration. Okay, it's wonderful to see a range of different firms, all of them related to finance, but including the regulator. It's just absolutely wonderful to see. So that would be SDG 17, collaboration to achieve the sustainable goals. Now, the correct answer to this question was 2030, okay? And I'm going to very quickly run through all of the SDGs, just because, you can get an additional 2 points if your team got any of these. So no poverty, zero hunger, good health and well-being, quality education, gender equality, clean water and sanitation, affordable and clean energy, decent work and economic growth, industry, innovation and infrastructure, reduced inequality, sustainable cities and communities, responsible consumption and production, climate action, the critical one that includes carbon, life below water, life on land, peace and justice and strong institutions and partnerships to achieve the goals is the 17th one. So if you've got any 2 of those, you can help yourself to another 2 points. I think what is distressing about that, those are such ambitious goals and 2030 is so nearly on hand. So there's work for all of us. Moving on to the next question. Question 4, with respect to disclosures of sustainability issues by companies, which of the following are challenges facing investors? And the correct answer to this question is A, B, and C, all three. And just to talk about them quickly, now, there is currently insufficient disclosure. Some companies are disclosing, and even if you just pick one area of ESG, so if you looked at carbon emissions disclosures, some firms are disclosing scope 1, some scope 2. Occasionally, there's someone who's doing scope 3. So there is irregular disclosure, if I could put it that way. Different people are disclosing on different things for different reasons, and because of that, that gives rise to the second point, that it's very challenging to compare company performance with insufficient or variable disclosure. And then, of course, C, the time lags between disclosure, or between financial disclosure information, which is typically quarterly and annual reporting, and ESG disclosed information, which, we're not yet in this habit of expecting regular ESG disclosure information. You can see a lot of regulations are kind of heading in that direction. So hopefully that's a gap that we can close. So for 1 point in your team, A, B, and C was the correct answer. Question 5, and this was about the Oxford University study of studies, and it's quite an old study. It's interesting. I think it's a 2015 study, which you have to be quite young to think is old. But so the correct answer to this question, and there's some quite good debate in our group until someone kind of like silenced everything with the correct answer. The correct answer is C, 80%. And now a lot of people have called into question, like, is ESG worth it? Am I going to give up returns if I focus on sustainability? And that just really kind of answers that question. All right. So there's this very strong correlation between, good sustainability practices and stock price performance. And there were some interesting other ones, which I thought I'd mention for you. In 90% of cases, sound sustainability standards lowered the cost of capital for companies. Okay, so that was a further advantage. And in 88% of the cases, ESG, good ESG practices resulted in better operational performance. So if you start to understand that low cost of capital, improved operations, and of course lower risk, that starts to correlate with that 80%. Fantastic. That was a single point for your team if you got C on that one. And I think that we are ready to move on to round 2. I hope everyone's feeling okay. Let's get stuck in. See you in round 2. Great, welcome back. So that round really was. Well, I nearly shared the wrong slide there. That would have been unhelpful. That round obviously focuses, specifically on sustainable investing methodologies, and so we're gonna just quickly talk through these. Okay, so the first question was a prospectus that emphasized attractive investment opportunities that demonstrate superior performance on sustainability issues relative to other companies in their industries. So this is best in class investing, also known as positive screening. So if you got 1B, that's a single point for your team. Now, what is interesting and part of what is appealing to people about best in class investing is it leaves the entire investment universe open to an investor in terms of sectors. Whereas, say, for example, exclusion by comparison tends to narrow an investment horizon. So what an investor in best-in-class investing is doing is they're saying, we can invest in any sector, but we are going to look for companies in that sector that outperform all the other companies on sustainability-related issues. So say, for example, you might have one investor excluding carbon-intensive industries as an exclusion strategy. A best-in-class investor says, we can definitely invest in carbon-intensive industries, but we're going to invest in the best carbon-intensive industries in that sector. So you'd still be able to invest in, say, a petrol refinery, for example. An oil refinery, as an example. But you'd be targeting the refinery that performed better on ESG indicators than others. So it's one of the specialist approaches, I would say. I don't think it's a vastly mainstream approach. And it obviously has some advantages and disadvantages. And you can also get index trackers that so they typically have names like ESG leaders indexes and so forth, which are in effect best-in-class approaches. Question 2, also a single point. A fund is described as a fund that invests in companies with products and services for people living in poverty worldwide, making a positive difference to their lives. Now, the correct answer to this is 2 is D. So for a single point, your team gets, for 2D, you get a single point. Now, impact investing is interesting. And it's particularly interesting because investors in impact investing are looking to measure 2 things. Okay, they are looking to measure their financial returns for those investments, and they are looking to measure impact. And those 2 things tend to operate on a continuum, if you like. So you'll get impact investors who are willing to give up, a percentage of their returns in order to achieve greater impact outcomes. So depending on where an impact investor is located on that continuum, there are, for example, impact investors who are happy with very basic capital preservation and no returns in exchange for impact measures. So of course, the critical thing with impact investing is being able to measure that impact. So in this case, how would you measure the impact that you're making on people living in poverty worldwide? I would say that impact investing is certainly a specialist field and is probably dominated, perhaps that's unfair, but it certainly has a very high percentage of sort of direct investment approaches. So private equity and direct investment, tends to go with impact investing. Question 3. According to its prospectus, a fund seeks capital growth by investing at least 2/3 of its assets in shares issued by large cap companies. Activities form an integral part of the water cycle. And then there are various examples of the water cycle there. And the methodology that this is referring to is thematic investing. Now, occasionally people get thematics and impact investing mixed up. Thematic investing is very much focused on returns, and it is very much focused on, how should I say, securing the benefits of the sustainability movement. Okay, so thematics tend to focus on investing in companies which people think have an advantage in a world that is becoming increasingly sustainable. So you often find thematics around critical resources, water being a case in point here. And there's a shout out for BNP who worked with us to build the game show that they've got an interesting water fund. But it could also be electric vehicles. It could focus on specific sectors of the economy, like the silver economy, healthcare or provisions for aging populations, etc. Thematic investing, also a specialist approach. Right, now I'm not going to kind of kill you all by reading through this with my terrible South African accent, but the correct answer to this question is ESG integration. And the critical words in that little cut from a fund prospectus or a statement from a fund manager is to do with the ESG part of the analysis, okay? And just to be clear, ESG integration is about doing financial analysis and doing ESG analysis at the same time alongside each stage of your analysis. So it's not like here's financial analysis and then we'll do an ESG screen afterwards. It is a side-by-side process. Now, one of the things that are kind of worth mentioning here is that people who have experience and history in financial analysis are really the people, who can operate effectively in ESG integration. So you may need ESG related skills, of course, but you also need the traditional financial analytics, if you like. So ESG integration, a couple of interesting points here. Together with stewardship or active ownership, which is in the following question, ESG integration and stewardship collectively, and they tend to operate hand in hand because you need to have a very detailed understanding of what that company's operations are and what the material ESG issues around each of those features of their operations and supply chain, et cetera, may be. So because it gives you that very granular information and data, it's also used by companies who are perhaps, say, passive owners offering index trackers, ETFs and the likes, but they are committed to sustainability and they are therefore engaging with businesses who are in their portfolios as owners in order to improve their sustainability practices, but that the data that they need in order to do that successfully is data that typically would come from an ESG integration approach. So, while exclusion is the most popular, integration and stewardship collectively are probably the largest from an AUM perspective. All right, that takes us on to question 5. You have 2 points here in your team. A, the correct answer was 5, exclusionary screening, avoiding companies based on ethical other concerns. And then active ownership, B, is 2, exercising shareholder rights and entering into dialogue with the company's management. And just to be clear, that dialogue is specifically about improving their performance on sustainability related issues. So A5, B2 gave your team 2 points. Excellent. Fantastic. I think we are probably ready for another challenging round. Let's take forgive me. Let me just give you a quick summary using this slide. So the reason the slide is cut in 2, green and blue, is the specialized are best in class, thematic and impact investing, as we mentioned. And then of course, exclusion, very commonly practiced, and ESG integration and stewardship are the mainstream ones in terms of AUM. I made a mistake of whizzing through that. Okay, I think what we're going to do now is we're going to hit the next room. Hi, everyone, we're back. Okay, let me just share the screen. There we go, and just go. There we go, question 1. Okay, so this round kind of looks pretty simple, but it can be quite challenging, so let's talk about the answers. All right, so question 1, which 3 are most directly environmental issues? And the correct answer to that was A, B, and D. Okay, so A, climate change, B, air and water pollution, and D, water scarcity. So if you got A, B, D, that's 1 point, okay? And then for an additional 2 points, you had to tackle C, which is government and community relations. And this is a sneaky one. It's a social issue, okay? And I think often people see government and they think governance, okay? But the key thinking around social issues is, if someone asks you, is this a social issue? Ask yourself, are these stakeholders? Are they people and stakeholders? Because, that typically, social issues are fundamentally about a company's relationship with the wider stakeholders in their community. So that is typically government and, any other aspects of the community. And then, so you got 1 point for that. C, if you got that as social, you get a point. And E, you get a further point. Succession planning is governance. So G pillar, okay, a critical G pillar issue. So you can see that we're starting to slide in some sneakier questions here, okay, and wait for our last round. Okay, question 2. Out of the following ESG issues, which 3 are most directly social issues? And the correct answer there is A. I don't want to give people the wrong answers. A, B, and D. And let's just touch on a couple of those social issues. So health and safety is a key social issue in supply chains in particular. I think we're all kind of quite well aware of that. And then, of course, supply chain management is even a kind of a broader area. Again, what impact is your supply chain having on the communities that it operates in? Okay, so there are kind of a range of kind of examples of where poor supply chain management has had massively negative social impacts. I'm thinking about, as an example, the collapse of the garment factory in Bangladesh some years ago. So these, the social impact of businesses and organizations' supply chains can often have a much larger social impact than the immediate business themselves. And then for an additional 2 points, okay, you had to pick out energy efficiency, C, which was an environmental issue, so E pillar, and protection of minority shareholders, which is also slightly tricky because it sounds like a social issue. Your minority shareholders are one of your stakeholders, okay? But the protection of minority shareholders is dealt with in companies through its governance structures. So E is governance, G. Okay, so you could get 3 points for that, A, B, and D for a single point. All right, C, energy efficiency, environment, got another point. Protection of minority shareholders, E, was a governance issue. Moving on, question 3. Out of the following ESG issues, which they are governance issues, all right, so the correct answer in this one is A, D, and E. All right, so I just want to double check what I have with the common sense on the screen. A is a critical governance issue. Okay, so bribery and corruption, it tends to function across sectors for different reasons, and affects both developed markets and emerging and developing markets. A, D, and E is the correct answer. Separation of CEO and chair, called duality, is a key governance issue. And of course, you've seen increasing focus on executive remuneration, and particularly in the finance sector, where executive remuneration really can be unacceptably eye-watering. Now, for an extra 2 points, data protection and privacy is a social issue. And that was a really tough one. I sort of threw out a clue in an earlier comment, which someone in my group heard. So congratulations if you did. And okay, let me just track down the last one, A, D, and E. And so obviously, sorry, I missed deforestation, B, which is obviously an environmental issue and a critical environmental issue considering the challenges that we face with carbon. Moving on to 4, which of the following statements about ESG issues are true? Now, for a single point, the correct answer of this question was B. The importance of ESG issues varies across sectors. So let's just talk about that for a second. What that's essentially saying, and it was kind of very eloquently put by a person in my group, is that what is material, in other words, what affects the value of a company or of a financial instrument, okay, varies from sector to sector. So for example, what is challenging for an internet service provider in terms of its ESG issues, or what's material for an internet service provider in its ESG issues, are going to be very different to what is material for a mining company. Okay, they may have some overlaps, but typically they just operate in such different environments. They have different materiality impacts for different issues. So just a pointer if you're interested, if you go and have a look at SASB, that's SASB, stands for the Sustainability Accounting Standards Board. SASB offers a free and excellent materiality map, and that will show you what ESG issues or what sustainability related issues matter for different sectors. Okay, so what is material for different sectors? Now, ESG analysis is not a substitute for traditional analysis, okay? And if you think about how ESG methodology works, so exclusion doesn't exclude you from the need to do financial analysis, and ESG integration is ESG issues running alongside traditional analysis. Again, I gave a clue to that because, you know, people who have a history or background in financial analysis, of course, are very important to ESG because that financial analysis remains relevant and needed, you know, across the board. And C, there is no defined way to conduct ESG analysis. Okay, so and you know, markets think that's both a good and a bad thing. All right, it obviously generates very different data outputs, which can be a real challenge. But there's also an opportunity from an investor's perspective to adjust how you perform ESG analysis and identify opportunities where you can further reduce your risk or further increase your returns from riding a sustainability wave, so to speak. So that was a single point, tricky question actually. Okay, question 5. All right, and this question required you to choose which were true. For a single point in your team, the correct answer here is A, B, and C. So they're all true. Okay, and let's just talk very briefly about why that is. So opportunities arise from companies outperforming other companies. We know that because we've been talking about best-in-class investing or positive screening, but there is also just the operational side of it. And again, I look back to the Oxford University study, okay? Companies that perform well in these sort of metrics, you know, low cost of capital, better stock price performance, et cetera, et cetera. So there are a lot of different ways that those opportunities can arise. Opportunities arise out of emerging industries such as renewable energy. Of course, I mean, there are critical industries. It's kind of the opposite side of stranded assets, if you like. Okay, so while there's a lot of pressure on certain industries from a sustainability perspective, again, there's massive growth opportunity for others. You know, so renewable energy is a case in point here. And then C, opportunities arise from changing trends such as demographics. Again, I gave a clue in one of the previous answers when I talked about the silver economy, which, just to be clear, the silver economy is like for people who are old. Okay, so when your hair kind of goes like this at the side of your head, then you're starting to join the silver economy. So of course, there are significant opportunities in supporting those kind of demographics. Okay, and again, societies that fail to take care of their elderly are failing societies one way or another. So there are opportunities for businesses to ensure that that isn't the case. Okay, how are those scores looking? I'm not going to ask you to add them up just yet, but I think I'll give you a quick summary here. The big takeaway for people, and I think generally speaking, people are starting to perform relatively well on these. We did have a couple of red herrings, you know, government relations and governance and things like that. But here are, you know, sort of just sample ESG issues. And of course, as sustainability moves forward, so you're going to see increasing numbers of issues emerge, especially in the environmental and social pillars, as science improves and changes, and our understanding of the impact on societies and communities that business practices have improved. Okay, all right. We're in for the final round. It's the tiebreaker. I almost managed to do it again and speak on mute. Eh? Welcome back. Okay, the final round. It's the equalizer, that's for sure. All right, so a challenge for scorers. Thank you so much for your efforts. And let's get into it. Okay, so this was a question about environmental risk and the responsibility of listed companies. And now that the scoring is slightly complex, okay, there are 5 points on offer here. The correct answer for 1 point to the question, okay, is A, B, D, and E. Okay, so that's the correct answer. And I guess the one that kind of brings about a lot of debate is B, okay? So we're quite aware that the release of radioactive materials in Fukushima in Japan in 2011 was as a result of an earthquake and a tsunami, okay? And so we quite often have people saying, well, isn't that really, you know, sort of a bit like C, you know, it's just sort of something bad that happens. But actual fact, if you're going to build a nuclear reactor on a fault line, close to the ocean, then I think that, and certainly lawsuits have proved this to be upheld, then you know you are going to be responsible for the consequences of an earthquake and a tsunami, which I think are kind of to some extent foreseeable in that area. So perhaps a bit of a harsh judgment, but certainly included B. Now, just to run through these companies, and I was kind of joking in my group that you'd have to be part of the silver economy to remember A. A was just an atrocious event, okay? The company in question it was called Union Carbide. So you get another point if you got Union Carbide. And the Union Carbide's plant in Bhopal released toxic gas that killed 25,000 people. Right, it's just a massively significant, you know, impact on a community and the environment that community lives in. What is interesting is that Union Carbide was subsequently bought by Dow Chemicals, and I think after that by Dow DuPont. Okay, and now, okay, in 2021, Dow DuPont was still facing litigation as a consequence of this event, and quite rightly so. You know, of course, when you buy a company, you buy its assets and its liabilities. What I think is an interesting takeaway from this question, just to flag, is that this is how enduring sustainability-related risks can be. Okay, so this event happens in 1984. All right, and you know, here we are. You know, more years later than people would care to remember. Okay. And there is still kind of impact in material terms. Okay, so Union Carbide for A. B, the correct answer for B is TEPCO, which stands for the Tokyo Electric Power Company. And they are the operator of Fukushima Daiichi Power Plant. I'm laughing at the comment put in the chat. Yeah, we'll sort out the silver economy. Quite right. C is not an event, so that was excluded. D is BP, British Petroleum. We'd accept either of those answers. And it's quite interesting just having a look at the cost of the BP in total. BP's, you know, the Gulf of Mexico event has cost BP $19 billion. Okay, so, and of course, the communities who relied on that ecosystem were very heavily affected. Okay, so just to give people an idea of the scale of sustainability-related risks, $19 billion and a whole lot of other significant financial impact in terms of share price, et cetera, et cetera. E is in fact even more egregious. Okay, and I just want to kind of have these numbers here. So this related to, okay, so sorry, the correct answer for this, and actually there are 2 points. I said there were 5 points, but actually there's 6. There are 2 points here because it was a JV, and the JV is between Vale, which is spelled V-A-L-E, so it looks like Vale, and BHP Billiton. Okay. And the total cost of that disaster was $43 billion US. Okay, So that's a relatively recent event. And in fact, subsequently, there have been tailing mine dam collapses in LATAM as well. So it doesn't look like the lesson has necessarily been learned by all. Okay, so there was an absolute haul of points on offer there. If you got ABDE, you got a single point. Union Carbide, you got a point. TEPCO, you got a point. BP or British Petroleum, you got a point. And Vale, you got a point. And BHP Billiton, you got a point. Okay, so that's a haul of points. Okay, excellent. Let's move on. Next question. Now, when analyzing companies from an ESG perspective, the weightings assigned to ESG typically differ, and we talked about that in the previous round about how these weightings differ. And what is the most likely weighting of the ESG pillars when analyzing a bank? And the correct answer for a single point here is C. All right, and that is because there are such significant governance issues around banks. Okay, and so just to give you some, I kind of like read through the list: anti-money laundering, tax evasion, mis-selling, various forms of internal controls, insider trading, all kinds of governance-related issues that can impact a bank. And that's why governance, executive remuneration, CEO, chairman separation, et cetera, et cetera, et cetera. So very significant focus on the banking sector in governance, but also, and this came up in a conversation in our group, it's not that banks don't have environmental or social impacts either, so it's not like it's, E1, S2, and G98. Okay, so the banks have very significant impacts across the board, one way or another, but governance is the key material focus at this point. Question 3, similar, and certainly in my group, people very quickly thought about the environmental impact of mining. And so the correct answer here is B, where you can see that the environmental sort of weighting is 35%. It's also worth noting, and this again was brought up in the conversation in my group, that mining companies have very significant social impact as well. Mining typically happens in underdeveloped parts of the world. There's often higher levels of pollution, which can affect local communities. There's degradation of land, there's encroachment, there's deforestation. There are a lot of kind of issues which have social impacts on the communities which, around which, that live around mining operations. And similarly, it's not that mines don't have governance related issues. So bribery and corruption is a key, sort of focus of governance in mining operations, because mining operations typically rely on licenses which are sort of issued and required, and there can be a lot of poor behavior and dark dealing which can be controlled by governance in relation to acquiring those mining permits. I'm South African, and it is it's Africa's story, if you like. Question 4. All right, now this was an interesting one because you had 4 possible points on offer here. And what we were looking at, and there were a couple of sneaky words here. So the critical things were sector-specific social challenges. So it wasn't an answer given in my group, but it was just discussed. People said, okay, well, what about diversity and inclusion, for example, which would be a social challenge, but that is a social challenge that is not specific to this sector entirely. So here are some answers, and I'll ask you to kind of use your judgment in this. Okay, so food safety, all right, that's different to nutrition. Food safety would be a specific social challenge. So in other words, are you going to eat something that's going to make you sick or worse? Okay, and there's some excellent examples also, sadly, from my part of the world where food safety has been compromised. Health impact, that's slightly different to food safety, and in particular, if you focus on issues around obesity and the sort of growth of percentages of people who are overweight, myself being one of them, sort of critical issues around weight gain and the health impact of that and the relationship that food has with that. We'll talk a bit more about that in the next one. Nutritional value. Okay, so food safety, health broadly, and nutritional value are all kind of critical issues, and I'll give you a point for each one of those. And then, of course, there's the supply chain area. So packaging practices, okay, sorry, purchasing practices, so fair trade, okay, we'll give you a point for that. Labor practices, okay, we'll give you a point for that as a general statement. And labor practices, and we'll give you an additional point for issues around child labor or indentured labor, in other words, slavery in the supply chain. Okay, so that gave you 6. Hopefully you got 4 of those key sector-specific social challenges. Now for one of our favorite questions, the last one. Now, the correct answer to this question is honey Cheerios, okay, counterintuitively. And what is interesting about this question, and the reason that we like it, is that it kind of quietly touches on greenwashing without intending to. The best way that you could have made a guess at this is that Nestle is a European country, European company, and Europe really is a leading indicator for ESG practices. So sugar content as a key health, nutrition related issue in the food sector, sugar has been under a lot of pressure in Europe for some time. Okay, so Nestle as a European company, is much more sensitive to sugar content. The other companies in this are American companies. So Kellogg's and Quaker are all American, or both American companies, and there is much less pressure on food producers in the US around sugar content, and that is actually changing. It'll interest you perhaps that the highest Kellogg's Frosted Flakes is the worst of the batch, and it weighs in with a mighty 57% sugar. Literally, nearly 2/3 of that box is pure sugar. And the Nestle Honey Cheerios is coming in at 16%, 1/6. Now, I think generally speaking, people would expect things like, Simply Granola and perhaps Raisin Bran to outperform on the sugar contents, and they don't. I think I've got somewhere here the specific contents. So Simply Granola is 25.5% sugar, to answer any of the questions that people ask there. And what was the other one? Raisin Bran is 30.5%. So greenwashing we haven't dealt with, but and this isn't really an example of greenwashing, but greenwashing is about misdirecting people's understanding through labels and boxes, covers, and certainly there's an example of that to be had here. Okay, I'm going to very quickly wrap up. 6 main approaches to sustainable investing: exclusion, ESG integration, best in class, stewardship and active ownership, thematic and impact investing. And we talked about some being specialized and some being more mainstream. ESG challenges and opportunities can vary in their materiality by sector. It's a critical thing to understand. And so we need to adjust the ESG criteria that we use in analyzing different sectors. And then finally, integrating industry relevant ESG material insights can help investors make better informed investment decisions. Okay, so for example, an insight of European companies typically perform better on sugar content than US companies. Okay, now I think that we have got to the point at which I'm going to ask our teams to, and just if we could have the scores. I think it might make sense to post the scores in the chat if each of your groups wouldn't mind just posting your score, and you will see that there is an event poll that's up on the screen at the moment. I'm watching the chat to see if we can get any scores out of groups. If you're uncertain about a point, give yourselves the benefit of the doubt. I think I'm going to have to call people out. So let me just, okay, all right. Well done, Team Deloitte. Okay, so Deloitte's got 56. Any others? Good quote, Caroline. Was that audited? I'm sure it was. Anyone else? How's the scoring going? interim audit.
They got so much. 86.
So I'm just looking at the numbers coming in. Okay.
We got 24.
Okay, it doesn't matter what the points are. Let's just hear them, man. Yeah, okay. SC with 33. Okay. All right, any others?
Maybank,
Deloitte might-
Rafida,
Oops.
how much was it? What do you get to total it up to?
Okay, sorry. It's okay, Maybank, we got 30.
Okay,
Okay.
30, there's another for 30. Well done.
PNB, is PNB there? PNB, Public Mutual.
I think PNB is doing a quick count.
For PMB, we got the last one wrong, which is a serial. Other than that, we got it right. So what's
Oh,
the
fantastic.
points? Not sure how to calculate.
Okay, but close to a full house. Okay. All right, excellent.
But the
Okay.
serial question was wrong, just to point it out. Yeah.
Yeah, great. Okay, look, it is kind of a nightmare for the scorers. So thanks so much. So what I'm going to do is pause it there. I think we've got scores in from everyone. Thank you so much. It appears that Deloitte's are the winner, and of course, it's always down to the accountants to make the final calculation. And so thank you so much and congratulations. Now, if I can just make a couple of points before I hand over to colleagues at CFA Society Malaysia. Thank you so much for playing the game. Okay, it's we hope you found it a different way to learn, that it doesn't feel like one is attending a lecture, but that at least it's engaging and there are connections to your everyday life. I have to say, for myself, we've run a number of these game shows. I was in the SC group, so I can't comment about the other groups, but I was amazed at the level of knowledge. Okay. And the sort of the thought processes about sourcing the correct answers were also particularly encouraging. So congratulations to all teams. I'm sure there were similar conversations in other groups. We are so pleased to be here with you today. Thank you for this, and please make sure that you share your knowledge in this case, because I think that everyone performed really well, that you share your knowledge with colleagues back at home base. And thank you so much for joining us today. I'm going to hand over to Carolyn or Evelyn, or take any questions that people have.
Thanks, Richard. To everyone who attended today, I hope you have truly enjoyed it. And as Richard mentioned, the whole purpose of doing the game show is to make this more interactive. And when you're in a group with your colleagues or your peers, it's good to see that you open up to discuss with them. A lot of the question, as you see, some may be quite straightforward, but some you would have to, voice out and see what your opinions are. So we hope you enjoy this and be able to take something back with you. I think a few of you here are directly in the sustainability sort of role. But having said that, there's always more rooms for us to learn on sustainability, because it's still changing with the landscape and industry, right? So we hope you enjoy and you'll be able to spread the good words as well back to your other colleagues and peers. As you mentioned, our CFA Society Malaysia is doing this as a learning offering to our employer partners. And if there are good feedback from you and you think this will also benefit your other colleagues back in your teams or the other teams in your organization, please do reach out and give the feedback to your HR representative, and we'll see what we can do to offer some more of this sort of learning offerings to your other colleagues, right? Now, to those who are interested to know about CFA program and also what it takes to be CFA Charter, we are going to have a webinar session next week on Thursday, 29, to share some of the requirements and what it takes to apply to be a CFA Charter holder. So if you're interested, although you're not taking the CFA program as yet, you can also join in to listen so that you will have better information before you come to a decision if you like to take the CFA program or not, because it is truly an investment on your professional development and your career pathway as well. Yeah. I think earlier on there was a question from one of the team members here. So what's the price? What are we giving out, right?
Sorry,
Richard,
I forgot the prize.
Richard hasn't
Yeah.
prepared the conflicts, and he's not able to fly in to present the
Yeah.
conflicts that you all have so heavily debated. That's the question. We always keep the best for the last because that triggers everyone's curiosity. Yeah.
So would it would have been a box of Nestle honey Cheerios, you know? So when we all escape the pandemic and we back doing these kinds of things in your workplaces, you would have won a fabulous box of cereal as a team, you know. Sorry to butt in. Thanks, Caroline, for reminding me of that. And I see there's a question from PNB for you, Caroline.
Hi. Just to double confirm on some. The first one would be that what's the score that PNB managed to get? That's the first question. And second question, what's the total score that someone could ever get? What's the maximum score?
Thank
you.
Thanks, Afik. I don't actually know the answer to that. You think you would have? I would after I'd run this game show so many times. What I can do though is do a quick count while we take other questions, and I'll just try and answer it straight up. So give me a second and carry on with other questions. Thank you.
Thanks, Brad. It's actually Tuesday. I think while working from home, dates and day doesn't really jive anymore to us. So it's Tuesday, 29th, the induction. Now, I want to just go back earlier on to the topic of gift, right, and prize. Well, I think although we are not able to give any physical gift, but what we are going to do is to inform and promote on our social media of today's session. And to the team who won today, Deloitte, we will also mention that participating in today's game show, Deloitte came up as the top of the score. And I hope that would be somehow a gift. You would view that because I think the topic of ESG is very interesting. And then to know that as part of this game show, the team has come out top in terms of the score, that will also give visibility on your perspective as well, into the understanding of what we have taught today. Yeah, so congrats team Deloitte. Although it's an interim audit, so hopefully it's held true.
Yeah, no. I think if I can just say something, because I think that people are kind of wondering, how does Deloitte get 56? And I will finish counting here. I think what often happens, it's happened to us before, is that people are saying, okay, the correct answer is A, B, and D, and they're like, okay, so there's a point for each letter, so to speak, which which there actually are in some of the questions, like the Fukushima TEPCO question has points for each answer. So it can be a bit confusing, but I'm close to the answer. So carry on, Caroline, sorry. 9-6, okay.
Also, I have a recommendation for future game shows, so to speak. I think just put like a Google form or something where everything is just automatically calculated and automatically recorded. I think that would be best, rather than just verbally asking and verbally just recording like that.
Right.
I mean, just a suggestion. Yeah, thank you.
No. Rashid, thanks so much for that. And in fact, one of the things that I wanted to do, just as a comment, I mean, I'm amazed at how well groups performed here. Okay, people showed up here, they had good thinking and they knew some answers. And what we'd love to do is challenge you to a round of our climate game show next, okay, which is a very different matter. And Rashid, thanks for your suggestion. Actually, our climate game show is automated. Okay, so that, but unfortunately, then people play individually, and I quite like the sort of discussion in the team. So yeah, bear that in mind. So we'll be back if you want to take up that challenge. Okay. One, and this is one. Okay. All right. So that is 8. And that one is 6. 6, 1, 1. 4 and 1. Okay, so the total points that you could earn in this game show, it's kind of quite amazing. I've never counted them before. Is, okay, 18, 32, 369, 41.
While Richard's counting,
There were 56 points in the total game show. So before we doubt Deloitte, okay, not only kind of audited accurately and got all the answers. So yeah, the total count, and thanks, Rashid. I think it's a great suggestion. The total possible points are 56. So that is, it's more than I would have thought. I would have guessed sort of in the 20s or 30s. And I think that the point about the automated scoring is probably a great suggestion. Thanks so much. Over to you, Caroline.
thanks, Richard. I guess that's something we haven't come across and the question for us, so now we are prepared as well. Yeah. So thanks, everyone. So today's session, it's meant to be more of a understanding and foundational level when it comes to the ESG understanding and knowledge. So what we're going to do next also is we're planning for a more intermediate level. That's going to come sometime in late Q2 or early Q3. And we hope that your organization will join in as well. I'm not too sure who your HR representative will identify, but hopefully we'll be able to see you in the other activities of CFA Society Malaysia. Yeah, so please follow us on our social media. Apart from game show, we have other sort of platforms when we engage on the topic of ESG. So we have multiple webinars that focuses on the thematic areas of ESG. So for those of you who are have SRI or ESG close to your heart, and if you follow us on our social media, you will see that we have a few of our webinars that focuses on SRI. And there are also the other regulatory engagement that we do. So I hope that would be, you'll find that useful in terms of improving your understanding. Yeah. So now, without further ado, that's been 1.5 hours. So thank you very much, everyone. And thanks, Richard, David, and also Alicia, who is joining us from out of Malaysia. So thank you as well to all the learning instructors who have helped us with the facilitation. Yeah. So take care, everyone, and see you in our next event. Thank you.
Thank you so much, everyone. Well done, the Deloitte team. Excellent job. Okay, all the best. Thanks.
Thanks,
Bye.
everyone.
Thank you, everyone. Bye.